Hey guys, welcome to AI Trading Live with your host, myself, Robert Grzesik. I hope you guys are going to enjoy this session. We got some really amazing stuff to show to you. We made some huge upgrades to our systems. We have a brand new AI that is just killer. And I think you guys are going to love what we have. We've got this brand new AI that's just absolutely killer. And you guys are going to love what we have. So, welcome to AI Trading Live with your host, Robert Grzesik, and let's get this kicked off. Let me share my screen and let's show you guys some of the really exciting new things that we have. So, let's get that screen share going. All right, there we go. Awesome. And for those of you in the US right now, I hope you guys are having a happy Thanksgiving. It's fantastic. I'm personally in Toronto, Canada right now, so we're not celebrating Thanksgiving. We celebrate at a different time of year. But I will definitely be taking a bit of a break today. So fantastic. All right, so let's get this kicked off. So we are AI Trading Live with Robert Grzesik. We're going to be using our platform botspot.trade, which I think you guys are going to love the upgrades that we have made. Here's a little bit about myself. So first of all, I'm a programmer for over 25 years. I've been doing this for a long time. I started coding when I was like 10 years old. It's actually more than 25 years. Time flies by. I have a master's of finance. I went to school at Schulich School of Business to get my master's of finance here in Toronto, Canada. I sold multiple tech companies, including one right out of grad school. I worked on Wall Street for a number of years. I also helped create a company called Voyager, which you guys may have heard of. We used to sponsor NBA teams and things like that. I was employee number 4 back in the day. We're kind of like a competitor to Coinbase. Basically, we took the company from 4 people all the way up to $1 billion. And then when FTX collapsed, Three Arrows Capital owed us $650 million, which basically took us out. But it was very fun to take a company from 0 to $1 billion, even if it came back down again. And right now I'm the CEO of Lumiwealth Hotspot, where what we do is we build AI tools for you, the trader, to make more money and to perform better. Right, here's our agenda for today. So first, we're going to talk about how BotSpot works. I want to show you some new features that we have. These things are killer. You're going to love what we have. It's fantastic. We've been showing this to a bunch of our clients and just getting some incredibly good feedback so far. And it's about to get a lot better too. We're now ramping up in this brand new interface. I'm very excited to show you this. You can also see our existing bots performance. We're going to go through our existing bots, how they're doing, and what their performance is like. We're going to plan out some new bots or some changes. I actually have some ideas for new bots today. I have some ideas for maybe some put option type bots, maybe some bots that can protect you against downturns. That's something that I'm actually very interested right now. We could take a look at some of that stuff. We could build and modify bots using AI. And of course, we're going to see the results. We're going to see how all this stuff turns out. All right. Of course, we have a disclaimer. Please read this over. I'm not a financial advisor. I'm not giving you financial advice. That's not what this is about. I'm going to be trading my own money. So you're going to watch me build bots and trade my own cash. What I do with my money is my business. If you guys want to copy me, that's up to you. You're welcome to do so, but I am not giving you financial advice. And I'm not trying to recommend any kind of stock purchases or anything like that. But more than that, please read over this disclaimer. And don't sue me if if you buy a stock that I personally like and it doesn't work out for you. But yeah, we're trying to be as transparent as possible so you can see basically everything that I've been working on and see kind of all the stuff. All right. Okay, so this is how BotSpot works. So this is actually fantastic. Let me see if I can get my face out of the way for a second here so you guys can see the full thing. How do I do that? Size, let's reduce. There we go. Okay, just so you guys can see the full graphic. All right, so how does BotSpot work? And this is actually a fantastic, funny story. I was actually able to make this infographic really, really easily using Gemini's new AI. I don't know if you guys have used Gemini's new image making tool called Nano Banana. Gemini is now officially the best AI in the world, Gemini being Google's AI. I literally just described how BotSpot works. I told it this is how our website works and kind of just rambled on for a bit. And it produced this beautiful infographic. Look at this. This is amazing. Right. So here's a nice little visual representation of how our website works, how BotSpot works. There's really two different paths you could take. You can go to our marketplace. If you want to just browse and run existing bots, you can see what we have there. You can copy and modify them, or you can just run them, right? Or you go down path two, which is using our AI bot builder, basically using our AI to create your own strategies. It's your personal financial advisor. You can do a lot of really interesting stuff with it. First of all, you can build your strategy. You can research and search things. You can back test your strategies, meaning do it over a longer period of time and simulate historical trades. You can analyze, you can do code suggestions, and it can help you deploy, and actually a lot more than this. This is we couldn't fit everything into one slide, but this AI is really powerful. We could do some really cool stuff for you. I'm going to demo that to you in a second. And then once you pick either path one or two, then you could also deploy your bots. And this could either be with fake money or real money. It's up to you. And we connect to a bunch of different brokers. We connect to Alpaca, Schwab, Tradier, Project X for a bunch of different futures prop trading firms, if that's what you're into. We connect to Tradeovate, which is the same thing as NinjaTrader. They're the same company now. And a bunch of other brokers too. We connect to Coinbase, Kraken, KuCoin, a bunch of crypto ones. So we connect to a lot of different brokers. We do not take your money. We want you to be able to connect to your existing broker and use our technology. That's how we work. All right. So let me show you an example of actually how all this stuff works. Okay. And by the way, if you want to try this out, check it out at botspot.trade, and you can actually do everything that I'm about to do here. Okay. Here we go. Hopefully that all worked. I see myself frozen on the screen for some reason. Hey, how's it going? I'm just reading out some of your comments here. Perfect. Welcome, guys. Welcome, welcome. Let me know if you guys can still hear me. Just because I see myself frozen on the screen right now, which doesn't seem like a good thing. So you guys, if you guys could use the chat, let me know if you guys can still see me. Because again, I look frozen on the screen. Let me try shifting. Yeah, let me know in the chat, guys, if you guys can still hear me and see me, because it looks a little messed up on my screen. All right, let me know if you guys can hear me and see me now. Just had to restart there for a second because my camera all of a sudden stopped. Let me know if you guys can see me now, hear me now. Perfect. Hopefully you guys got everything that I was talking about there. Please let me know, guys, if I should go over that again. Let me go over that one more time because my screen froze there. And I'm not sure if you guys got that. So let me try this one more time here. So here's how BotSpot works. Okay, so this is actually really cool. I was able to make this thing here. I don't know if you guys have tried Nano Banana yet or Gemini's AI. It's actually really impressive what it could do. I basically described our website to it, and it was able to create this infographic super, super easily. Right, and this is basically how BotSpot works. We have two different paths. You have one path where you can go to our marketplace and you can basically see different bots that we've added to Marketplace. We just launched it recently, so we have a couple bots in there. We haven't put everything in there yet that we have. Some of the stuff that our customers are running are doing extremely well, which is not in our marketplace yet, but we're going to be actually having a competition soon too around our marketplace and for you guys to create bots. I think it's going to be really, really cool. But either way, path one is going to our marketplace. You guys can browse and run existing bots, or you can copy and modify the strategies in there. Very easy to go in there into our marketplace and browse bots and run them. Or you could go path two and just build your own, right? So if you have your own trading strategy in mind, you could use our AI bot builder. It's an AI agent. Think of it as like your personal financial advisor, where you can build a strategy, you could research things, you can back test and analyze. It could give you code suggestions, it can help you deploy, and a bunch of other stuff. Actually, we're going to be making an AI chart builder as well, so you could like make charts using AI. This is really cool. There's a lot of really, really powerful stuff that this AI can do for you. And regardless of whether you go down path one or two, you're going to be able to deploy this bot. And when you run this bot and deploy, you're going to be able to connect to different brokerages. We connect to a lot of different brokerages. Alpaca, Schwab, Tradier, Project X, if you like using prop trading firms, Tradeovate, which works with NinjaTrader, and many, many more. So there's a lot of different brokerages that you can connect to. We don't take your money. We connect to your existing brokerage already. So if you have one in mind, one that you've been using, you could probably just use that already. So we connect to quite a few. There's a lot more in this list. There's a lot more that is not in this list, like Coinbase and other things like that too. Okay, awesome. So let me show you an actual demo of this. I'm very excited to show you guys what this looks like. We've been working very, very hard to get this out to you, and our new AI is finally live, which I think you guys are going to absolutely love. So again, if you guys want to check this out yourselves, you can go to botspot.trade and you can see essentially how all this works. So here I am on botspot.trade. Let me log in. I'll log into my account here. I'll show you guys what this looks like. So here's a brand new AI that we just launched. So let's say I go to the website and say build with AI, right? I could ask it. So I could do things like I could ask it questions now, and I could actually talk to this thing and do research. So how about, this is something that I've been thinking about quite a bit, is how do we make a bot that will handle it if the market melts down, right? So that's something that I think would be quite important going forward. Especially we saw the market meltdown basically over the past couple of weeks. And what can we do to prevent that? What kind of strategies can we do? So let me ask the AI, right? What kinds of strategies would be good if the market melts down like it did the last few weeks? Put options, or what can we do? All right, so I'm going to type that in, and the AI is going to go off. We're actually using Gemini 3 behind the hood, guys. This is flipping awesome. Gemini 3 is super powerful, super smart. Literally the smartest AI on earth right now. That's what we're using, and we gave it a bunch of tools to be able to do a bunch of stuff. So here's what we got. It says, in a market meltdown, the goal is to profit from falling prices or move to safety. While buying put options is a classic manual strategy, automating options can be complex due to liquidity and expiration management. Here are 3 robust alternatives we could do right now: inverse ETFs, long, short trend following. We can definitely automate anything. What is the best strategy for making money in a downturn? Right? Put options actually sound like a very good idea. I'm just thinking that we can't actually do that, but we definitely can build put option strategies. Right, saying inverse ETFs. I've actually worked with inverse ETFs before, and it's worked out quite well for me. Or actually, sorry, inverse ETFs have not worked out very well for me. So I'm actually not a fan of inverse ETFs. Right, and it's trying to generate a strategy for me. So I'm going to say, do not generate any strategies. I'm just asking you. I'm going to plan out a strategy here. Okay. So here's what it's saying. Put options are theoretically the most powerful tool for a crash because of convexity. Here's why they're often considered the best for downturns compared to other methods, along with the specific challenges of automating them. Asymmetric risk reward. When you short a stock, your max profit is 100%, but your risk is infinite. With puts, your risk is capped at the premium you paid, but your profit potential can be 500%, 1,000% or more. As explosive gains on gamma as the market drops, right? The catch for automation, while puts are mathematically the best crash protection, automating them is significantly harder than trading stocks. We can handle any kind of automation. Don't worry about that, about complexity. What would be a good put option trading bot? Please help me plan it out. Do not make it yet. It's really trying not to give me put options, huh? This is pretty interesting. It's saying they're complex. It's actually this, we need to teach this tool about how much power our system has, because we can definitely build that. It's saying, oh yeah, we can't do that because it's complicated to do. Well, that's exactly the reason why we have this platform. So we can make it non-complicated. It actually makes it quite a bit easier to do. All right, let's see. Here's a blueprint for a dynamic put sniper designed specifically to capitalize on multi-week meltdowns. Awesome. The setup, entry trigger. We don't want to buy puts when the market is choppy. Time decay will kill us. We only want to buy when a verified downtrend begins. Interesting. So indicator, 20-day exponential moving average versus 50-day SMA. Signal, when the price closes below the 50-day SMA and the RSI is below 50, confirming bearish momentum. Filter, ideally check that VIX is rising, ensuring premiums are expanding. Interesting. Okay. The contract selection, Greeks. Understand SPY or QQQ. Expiration 30 to 45 days. Why shorter options decay too fast. 30 to 45 days gives you the meat of the move without fighting rapid time decay. This is very interesting. Strike price is saying we want to have a delta of negative 30 or negative 40 out of the money. Why? These are cheaper than at the money puts. If the market crashes, the delta expands towards -1. Okay. In a meltdown, you put your put option will go deep in the money very quickly. The rule, if the option delta hits -70, sell to close and roll down. Buy a new put option that is again out of the money. Okay, stop loss. If the underlying stock closes back above the 20-day EMA, the trend is over. Okay. Okay, please build this strategy. Okay, so we're gonna have this thing actually build the strategy out. And let's see what this thing creates for us. This is actually very interesting. This is so it's saying we're gonna be basically looking for a downtrend first. So we want to be looking for a downtrend. And then if the price is below the 50-day EMA and the RSI is below 50, then we do this. And ideally, we also are looking at the VIX. That's pretty interesting. So I think because it built a strategy, it's saying it's looking at strategy code, but we don't actually have any strategy code yet. Let's see what this thing builds for us. So right now it's seeming like it's inspecting code, but we don't have any code yet. So I'm trying to understand what it's doing. We're going to give it a few seconds here. So it's applying your requested refinements now. What I'm going to do, I'm going to start a new chat because this thing is doing some funny stuff. So let's go like this. I'm going to go make this strategy. All right, there we go. And this thing should create a brand new strategy for us based on all of this. This actually seems very interesting. You know, it's pretty complicated. There's definitely a pretty complicated strategy where we're trading off of delta. We're looking at exponential moving averages. We're looking at the VIX. Let's see how this does. I have a feeling this might be almost too complicated as we're doing so many things all at the same time. But let's see if this works out. I'm actually curious to see whether this is something that's going to be profitable or not, because there's quite a few different things here. We're looking for confirming downtrends. We're buying puts out of the money. I think this is all like pretty smart ideas. Like I agree with actually a lot of the stuff that it's saying here. Right? It was saying, you know, delta, like a delta out of the money, expiration 30 days. This is something that I do quite often, right? Whenever I trade options, I usually buy them, 30 to 45 days out of the money or longer, right? Because whenever we do that, then it prevents you from having theta decay. So if you guys have ever traded options before, you know what I mean. Theta decay can eat you alive if you're trading short-term options. They do move a lot when the market moves, but you're also fighting a downtrend, right? Because just naturally options lose value over time. So the closer you are to their expiration dates, the more likely it is that that you're going to lose money quickly, right? So even let's say if you had a like a 1 day old option, right, and if it went in the correct direction for you, it's still possible that you lose money, right? Because you're actually fighting that time decay. So this is actually a pretty interesting strategy. It's taking into account that as well. We're gonna have to teach this AI to know how we can actually build some pretty complex stuff. There's some things that I'm thinking of here. Okay, there we go. We got that going. We're starting a back test. I'm going to move this over. I'm going to make myself a little note in my to-do list to remind me of this. Gonna make a few little changes there. Okay, let's see what it built. Okay, so I've successfully built the dynamic put sniper strategy revision 1 based on your blueprint. To answer your question, yes, rolling logic is superior choice here. Holding a single put until the bottom often results in giving back profits as the option goes deep in the money. Okay, entry trigger buy put option. Okay. Rolling logic checks daily. If delta hits negative 70 deep in the money, it sells a position and immediately buys a fresh out of the money put to compound gains. Okay, cool. So it started a back test for us automatically, right? But what I would like to do is run a back test over the time when the market fell in 2025. I think it was around March or April. We want to back test over that downturn, plus a few weeks at the start and end, so that we can see if this works in a downturn like that. All right, so let's see. We have the AI analyzing my request. Let's see if we can figure this out. This is actually a pretty complex ask. I'm actually putting the AI through its paces right now. It's starting a backtest automatically, checking backtest status. Okay, let's see. Okay, so we have a backtest running here. Let's see how this is doing. It picked February 14th, 2025 to May 14th, 2025. That's actually very good. It picked some very good dates for us. Perfect. I like that. That was smart. A brand new AI is definitely doing some pretty killer stuff. That was actually very impressive that I was able to ask it that. I basically asked it. So for those of you just tuning in, we built a put option trading bot because we're looking to do something like if the stock market falls, we want to be able to profit off of that. So we built a bot to do that. And I actually just asked the bot, I said, you know what, back test it over the time period when the market fell this year and actually figure that out. It figured out, you know, this is the time that it fell. It's doing it from February till May. And we're running this back test. Let's see how this goes. Right now, it's probably just downloading some data. Let's see how this runs. The one right before it did not have any trades, which makes sense because we did not have a steep enough downturn. I'm actually wondering whether our AI is a little bit too strict. You know, we built out this bot and it's the rules might be a little too strict around it. So I want to see this back test. We'll see how this works. We'll let it run for a bit. And let me check up on the logs to see what it's actually doing. Right, yeah, no signal, no signal. It's downloading some data. Right, so it's basically just downloading data for us right now. We're letting it do its thing. Right, there's actually a lot of data to do something like this. When we're running put options are kind of a lot. So we got a question here. So just Medi, this is a good question. What LLM are we using in the background? We're using Gemini 3. So actually, we use a few different AIs. I'll take that back. We use Gemini 3 to have the conversation going. So if you see all this conversation that we're having back and forth, there's all Gemini 3. I actually think it's very good at tool calling and things like that. And then for the code generation, we do not use Opus 4.5. We've thought about it. The problem with Opus is that it's very slow and it's very expensive, right? Opus is something like 5 times more expensive than Codex. So we use Codex to generate the stuff. We actually don't need a more powerful AI than Codex. We found that Codex is actually performing very well at generating these things. So we actually don't need a different kind of AI. Opus is great, but I just think it's overkill. You know, we don't need to spend that much money on generating strategies. All right. Right now, we're watching this thing. It's downloading some data. I'm just taking a look at the logs here. Closest strike. Right, so this is actually pretty complex because it's based off of deltas. So it actually looks like it found something. I'm just reading through the logs here, right? But it looks like it found something and it's actually buying a put option. So this is fantastic. Let's see how this turns out. Okay, so bought a put option. We go watch this thing go. It's at 12% right now. Let's see if this thing actually makes money. I'm very curious. Because if this thing would have made money at the beginning of the year, you know, presumably if something else like that happens, this thing could actually do very well. So I'm very curious. It's it does take quite a while to back test this though, because we're looking at deltas, right? We have to download a lot of different options. So this thing is going a little bit slow, but it makes sense though. It's going over so much different data that it actually makes sense. for it to be slow. I'm not that surprised. Right, yeah, look at this. It just keeps downloading data. It's downloading tons and tons of data. And one of the things that we actually added to our platform very recently, by the way, for those of you that are curious, is we actually added in the ability to cache data like this. So the first time around when we run this back test, it's going to be a little bit slow because it's never seen this data before. But the second time around will be much faster. Yeah, look at this current option delta, -87. Right? It's very interesting watching what it's doing here. Trade event received, fill, processed by broker, right? Position liquidated. So it seems like it would have actually made money selling this put option. We just have to wait for it to actually get a little further along in terms of the results here. We made a lot of big improvements to our platform. So this thing is still backtesting. We're going to give it a few more minutes. In the meantime, let's talk this AI. So I was wondering what we could even talk to it about. I really want to see what these results are. What do you guys think, by the way? What kind of strategies would you guys use in a market downturn? All right, let's say the whole market goes to hell in a handbasket. You know, what would you guys use to prevent that or to make profit off of that? I know Michael Burry, what he's been doing is he's been actually shorting a lot of these high-flying names, right? So he's been shorting, Palantir and a few other ones like that. Oh, look at that. We're actually seeing some results here. This is great. So it made $5,000. So this thing started off at $100,000. So it is profitable. I'm wondering maybe it's just not buying enough options. It's a $100,000 account that we're simulating here. So we probably want to make this thing use more options. So let me actually ask this other AI because it actually did make money. Look at this. So far profitable. How many options does this thing buy relative to the account size? All right, let's see what it says. And check this out. We have this new AI. It's inspecting our strategy code. So we actually have the code for you here. For those of you that are coders, you can actually grab the code and you can work with it. All right. So if you guys want to just use this code and go off with it, you guys can definitely do that. That is available in this platform. However, you really don't need to do that. You see that on the side here, we have it inspecting our strategy code. It could actually tell you what's going on here. So I don't even have to really go through the code. I could just say, how many options does this thing buy? And it'll actually tell me based on the code. And it's going through back tests. It's not going to be able to see this back test just yet because it's not completed yet, so it doesn't have access to all the different artifacts that get created after we back test. But it looks like this thing actually did what it was supposed to do. Basically, it owns some put options, and then when the market did a big downturn, it got in, right, made some money off it, and now it just seems to be kind of coasting. So it actually is doing what we want to do. This is very cool. Okay, so here's where we're at. So it says the strategy uses a fixed fractional risk model to determine position size. Here's the exact logic from the code. The bot calculates the number of contracts to buy based on risking 2% of your total account. That's not nearly enough. Sorry, man. We need to increase that. It takes the total portfolio value, cash plus open positions, and multiplies it by 0.02. 2% example on a $100,000 account, the risk capital is $2,000. That is why we made about $4,000 or $5,000 only. I would actually get this thing to risk more because we have already a bunch of parameters that it has to pass through before it even gets there, right? So it says determine the contract cost. It checks the current ask price of the selected put option and multiplies by 100, right? That makes sense. Then it calculates the quantity. It divides the risk capital by the contract cost. Okay, so 4 contracts. That's 4 put option contracts on a $100,000 account is a little ridiculous. Safety checks, always tries to buy at least 1 contract if the signal is valid. Cash limit, if the calculated quantity costs more than your available cash, it reduces the size. Okay, so that makes sense. So here's the backtest. It's currently running. I'm monitoring it. And then the 30-day backtest completed with 0 trades, which makes sense because it never triggered this price action. This is actually fantastic. This AI is really smart. Holy crap. Okay, so what I would want to do is I would want to take bigger positions. I don't like it only trading 2%, right? It depends on everyone. Everyone's got their own risk tolerance and all that. Oh, look at that. It actually made more money again. What the hell? When would that have been? It actually made another trade and made more money. I thought that it would have only made money in March, but this is actually pretty good. I'm actually pretty impressed so far. Look at this. It's like barely ever loses any money. It's just basically going up. Look at that. Boom. Made another 5,000 bucks. This thing is awesome. I guess this is over that downturn, right? This is all going over. We're doing this from February of 2025 till May of 2025. So this is actually like the perfect time period for this thing. So we're running this thing. And so far, so good. I'm actually very impressed with how this thing is working out. So what I would want to tell this bot is, okay, this bot should definitely take much larger positions than 2%. We should use at least 10% of the account when buying the puts. I think 10%, but we might need to make sure that we don't hold them too long or something like that. But we might also need to make sure that the puts don't go to 0 because we hold them too long or something. What do you recommend? Do not change the code yet. All right, let's see what it comes up with. I just think it's too little. 2% of the account. I mean, this is actually pretty impressive. Look at how much money. This is a 2% of the account position. It made 10,000 bucks in like a month with only 2% of the account. That's actually really impressive. Right? But imagine what if it owned more, right? What if it owned 10%, right? Like this is something I'm thinking of, I could actually run on maybe my Schwab account, right? And then just whenever something pops up, we'll just take a bunch of cash and just buy this, right? I think that'd be really cool, right? Or what we could do is we could have a bot that normally owns like a TQQQ or something like that and flips over to put options when we start seeing a market downturn. That would actually be pretty damn interesting too. As it says, currently crunching numbers, increased position size is a major jump in the options world. This move goes from conservative to aggressive speculation. Makes sense. The risk going to 0. You're absolutely right that worried about options going to 0. If you allocate 10% of your account to a single put option and it expires worthless, you lose 10% instantly. A string of 3 to 4 bad trades could draw your account down by 30 to 40%. Yeah, that makes sense. That is actually quite it makes a good point. This AI is actually making a very good point. My recommendation is safe, aggressive setup. To trade 10% size without blowing up the account, we need to add 2 specific safeguards to the code. This allows you to swing big bats, but cut the trade before it becomes a total loss. Hard stop loss on premium. Instead of waiting for the trend to reverse, we add a catastrophic stop rule. If the option premium drops by 50% from our entry price, sell immediately. That actually makes a lot of sense. We have like a stop loss, right? So add a 50% stop loss, right? So math, 10% size, right? 5% total account risk per trade. You get the upside of a 10% position, but your downside is capped at 5%. You survive to fight another day. That actually is not a bad idea. I like that idea. The time stop DTE floor. Options lose value exponentially in the last 14 days. holding position and hoping for miracles how accounts die. Rule: if days to expiration is less than 10, sell the position no matter what. This prevents you from holding dust until it hits 0. You salvage whatever premium is left. I actually really like these recommendations. These are fantastic. So basically it's saying put a stop loss of 50%, and we have a take profit rule of 200%. I didn't even realize that. Sell if DTE is less than 10. I actually really like these ideas. Check this out. Here's our back test. It's still going. This is pretty damn cool. Look at this. 2% of the account is up 10,000 bucks. Someone's saying here, you want to do 20%, huh? We could. 20% is definitely risky. I mean, this other AI, like our AI is saying here, it's saying 10% is risky, and you want to go 20, huh? I think we know what kind of risk taking stuff you do. I think that'd be pretty cool to see, though. I think, look at this. So theoretically, right, if it made $10,000 with 2%, it should have made about $50,000 with this higher amount, right, with the 10%. And theoretically, if we use 20%, it would do even more, right? What it would do is it would have made $100,000 or something. That would have been pretty damn crazy. And what I'm also thinking, another thing I'm thinking, because this is actually good. LOL. Yeah, I know that's ambitious. 20% is pretty crazy. That's very aggressive. Our AI is saying 10% aggressive, as you're saying 20%. Why not? YOLO, right? I'm down to try it. But what I'm also thinking is I would want this thing to make money in normal situations, right? Because this is a strategy. Okay, it makes money when the market goes down. That's great. But what about when the market is not going down? I'd want this thing to actually still own something in the meantime. It should own like SPY or whatever in the meantime. Or we can make this thing like super leveraged. We can make this thing own TQQQ. This is kind of what I'm thinking. What if we own TQQQ in most situations, and then whenever it finds that this thing hits, right? It actually seems to be pretty good at getting RSI and all those other things. That's what it's using here. I think it's using where are the parameters here? EMA, right? It's below the 50 EMA and the 20 EMA, and it's an RSI below 50, right? So if we're below the 50 EMA and the RSI is below 50, that's when it enters. It actually seems to be, not a bad thing to do. Look at this. It's up 109,000 bucks. So it's up 9,000 bucks. So what if I also think this strategy should own something when we are not in the downturn. Maybe TQQQ is one of my favorites. If you guys have never seen TQQQ, I actually love trading this thing. Check this out. This is why I love TQQQ. So check this out. And this is basically the triple leveraged NASDAQ, right? So if you compare this to QQQ, which you guys have probably heard of, the NASDAQ, it does 3x that, right? So if the NASDAQ is up 1%, this thing is up 3%. If the NASDAQ is down 1%, this thing is down 3%, right? So it's much more risky, but also has some pretty crazy returns. Look at the results over a long time period with this thing. Since it started, it's up 24,000%. So basically since 2010, it was founded in 2010, 15 years later, it's up 24,000%. That's 241 times your money. That's flipping insane, right? But the problem is that this thing has these big drawdowns, right? Obviously, it's a lot of risk. And, if something goes against you, if the market falls, you can get hit really hard. So I think that would actually pair very well with our strategy here, which makes money when it goes down, right? So imagine we have a strategy that's leveraged on the way up and has put options on the way down, right? So it actually buys those puts. I think that's a very interesting strategy. So let's see. What do you think about that? Don't change any code yet. Let's see what this thing does. So it's checking the back testing status again. It'd be actually really cool if we could get if this thing could read our back test before it even finishes. I wonder if we could do that. I think that'd be a pretty damn cool feature. So even when it's like halfway through the back test, it could already start analyzing it, right? Because right now it's running it, but we're waiting for it to complete. Right? It actually did very well. Look at this. This is $7,000, risking only 2% of the account. That's pretty wild. Okay, bull asset, hold TQQQ when not in a crash. And then bear asset, buy these when the crash is confirmed. Increase put sizing to 10% of the account. And then add 50% hard stop. Yes, please make these changes to the strategy. Okay. Now let's see what happens here. This is balls to the wall, super risky, but potentially I think this thing could make a lot of money. That's what I think. I think this thing would be very profitable. Look at this. This thing made a 40% annual return on this time period. This is when the market dropped, guys. This is something that makes money when the market actually falls. Right? So we see this return here. This is what it looks like, right? We'll get rid of this. We'll get rid of this. We'll get rid of this. And then this is basically what happened. Check this out. Went up from $100,000 down here. This is February 18th, and then basically made a ton of money as the market was falling. Look at that. Really nice, profitable thing when the market falls. Okay, let's take a look at the tear sheet. Look at that. Boom. Stock market goes down. Ours goes up. Almost exactly the opposite of what the stock market did. Right? So you see here, this is the S&P 500. It dropped over this time period, right, in yellow. And then our strategy made a bunch of money during that same time period. Right? So it almost looks like a mirror image. That's kind of crazy. And look at that. Even when the market came back up again, we didn't lose that much money in this thing because it didn't actually enter back in. So that's actually very interesting. I think it's a very cool strategy. Okay. I'm just going to say, you stop worrying about the back test. Just change the strategy with your suggestions. I was trying to stop the back test for some reason. I don't know why. It's very interesting to see what AIs try to do on their own. Is to go off and have a mind of their own. All right, it's inspecting the strategy code. Let's see this thing actually make the changes that we requested. This is the first time that we're actually doing, we're using our brand new AI on a live call, guys. So this is actually really fun to watch. Let's see what's going on here. It's actually doing some very impressive stuff. I'm very impressed with our new AI. Gemini 3, guys. Gemini 3 is really powerful. That's what we got running under the hood here. Right, it's inspecting the code. And then let's see it actually. There we go. Applying your requested refinements. Now this may take a little bit of time. Okay, cool. So this will take about a minute for it to do. Okay, and I want to look over the rest of this tear sheet. Look at this. It had a drawdown of only 4%. This is crazy. Like when the market was down, it did really, really well. We can see here the SPY. It was down 1% over this time period. It was actually down more. It was down 15%. I don't know why our total return says, oh, I guess total return, because it popped back up again. It went down and then came back up again. So the max drawdown, yeah, so the S&P fell 16%, and the worst thing that we had was 4%. Makes you wonder, I think 10% might be a little too aggressive. We just upped that to 10%, so this should be about 5 times bigger, so we'll have a drawdown of 20%, which is kind of the opposite of what we're trying to do here. Although it probably would have made a ton of money. I'm very interested to see what this thing does with these new changes that we got going here. Still generating this new strategy. And then we'll run a back test over the same time period again. Okay, and actually I'll even tell it run a back test over the same period again. All right, we'll do that after it finishes. This would actually be kind of cool to put in like a queue, let it like queue up. I'm impressed, guys. What do you guys think? What would you guys want to see the strategy do? And are you guys concerned at all about a market downturn? I feel like after the past week happened, I was like, the stock market fell to me what seems like for absolutely no reason, right? Like it made no sense to me why the market all of a sudden crashed. I think it's just we've just gotten so leveraged. I just think there's so much leverage in the system. We're at very high PE ratios. A lot of people these days are trading on margin and on using debt to trade. And I just think the leverage in the system is just making everything super shaky. That's what I think. And then you pair that with, just a little bit of bad news about the AI sector. I think that's why things blew up. That's my theory on it. I'd love to hear what you guys think. Why do you guys think that the market actually fell those past 2 weeks? Because we've been seeing nothing but good stuff. What I thought was very interesting was Nvidia came out with incredible earnings. The earnings were amazing on Nvidia, right? Everything, guidance was great, everything was fantastic, everything is going great, and the stock drops. What the hell, right? Like that to me is a signal of a market that's looking to fall, right? Like if even good news makes it fall, then what's going to happen when there's bad news? You know what I mean? So that's my concern here. That's why I'm looking at building out some sort of put option trading bot, because I think that it would actually be able to do some pretty cool stuff with that. All right, I think a put option trading bot, it's definitely will make me sleep better at night. Okay, so there we go. We now have version 2, right? This is how the strategy works. Okay, if it falls by whatever percent, okay, and started a back test, I want to run a back test over this time period. All right, because I want to see that same time period again as what we ran before. Yeah, when the market falls, it definitely falls fast. I agree. Okay, we've launched a backtest for revision 2. Let's see how this is doing. Okay, now we can actually watch this backtest. The last one gave us a 7% return with only a 4% drawdown. That's pretty damn impressive. Let's see how this new one does. I think this new one's going to be a lot faster too. Look at that, it's saying it's 95% done already. That's crazy. Backtest. Wow, holy shit. Okay. That happened that's crazy how much faster it did that. Annual return, 82,000%. So it made a 29% total return. Look at this annual return. This annual return looks stupid. This doesn't even look real. But it makes sense though, because if you actually annualize the 29%, right? If you could do this over and over and over again, then it would do that. But I think we also backtest over the wrong time period. This went over, this is saying we went from April to May, and it's not what we were supposed to do. It's supposed to go from February till May. Maybe because it didn't actually place any trades. Is that what it is? Let me try doing this again. We'll go February. Let's go starting February 1st till May 31st, let's say. We'll run this back test. I have a feeling something changed with the logic. There might be something that actually is not entering into this downturn, because it looks like it's actually bought when the stock market was going up, right? Which is, to me, suggests that it didn't buy anything. It didn't do anything over the downturn, right? So we might need to tell this AI to fix that. Let's see. It also completed very quickly. So that to me seems like the entry criteria changed or something like that. We'll have to ask this thing. Yeah, so here the US market is still stronger than the rest of the world. I definitely agree with that, although I still do think that there's a lot of risks. I've actually been diversifying outside the US lately. And that's not because I don't think the US companies are great. Like, I think US companies are amazing, and there's a lot of really good stuff in the US markets. The problem is that the US has an incredible amount of debt, right? That's my concern, right? Is US markets right now, they're really ignoring the fact that the US is an extreme amount of debt. And I think it's something like 15% or 20% of the entire the entire government's budget is just going towards paying interest. Like, it's crazy. Like, and we're still spending more. We're still talking about giving out $2,000 checks. Like, with what money? I'm like, I don't understand. And yes, I agree. The collapse of crypto was pretty hilarious. It was crazy how fast that fell. Yeah. What's $37 trillion? I agree. $37 trillion. Okay, so I'm gonna get this AI. So it seems like our entry criteria for the options didn't hit on this back test we ran from February till May. Why did it not hit? That seems very odd to me. Or am I wrong? Can you please take a look at this back test? Why was it different from version 1 to version 2, where version 1 we traded over this time period from February till May, but for version 2 we did not trade over that time period, or we didn't buy put options? Please investigate that. I have a feeling that it did some weird stuff in the code. There's a hard stop loss, time stop DTE, right? Something may have gone a little wonky. So we'll get the AI to investigate what the heck is going on. This thing now is just downloading a bunch of data. Yeah, we'll stop this one because we don't even need this. Okay, retrieving trades, retrieving logs, right? So now we have an AI that could analyze all this stuff for us. This is pretty damn cool. I don't know if you guys are thinking this is as cool as I think it is. I think it's freaking amazing. We can build some really impressive strategies using this stuff. All right, we'll let this thing do its analysis. Why did it all of a sudden not trade for us? Or at least it didn't buy put options, is what it seems like. For some reason, the options didn't hit. All right, so we're getting this AI to analyze that. We'll see what is the reasoning behind that. I'm actually looking forward to the Flash version of Gemini 3. They're going to be releasing a Gemini 3 Flash sometime soon. I asked ChatGPT. They think it'll come out probably in the next, 4 to 6 weeks or something like that. But when we get the Flash version, we'll be able to speed this thing up like crazy, because this thing is crazy smart, and we can make it even crazy fast as well. I think that'd be awesome. Okay, so let's see what it says. So the investigation is complete. The reason revision 2 did not buy puts is a data feed error, not a flaw in your strategy. Interesting. Logs reveal that the bot failed to retrieve necessary historical data. No data available for request. No data. Okay, missing warm-up data. To calculate 50-day SMA, the bot needs at least 50 days of price history before the backtest starts. The failure for a specific run, the data provider failed to return the pre-February history. Consequences: without the SMA, crash signal could never calculate. Interesting. Okay. The result, since the signal was never true, due to error, the bot defaulted to the else condition and hit TQQQ for the entire period. Performance at plus 29% return came entirely from holding TQQQ during the recovery. Okay, so revision 1 started on February 15th, 1 day later. It likely hit a different data cache that successfully provided the history. Okay, recommended fix. To ensure indicators are ready when the crash happens, we need to start the backtest earlier to give a bot a warm-up period. Shall I run the backtest from January 1st? No, I don't think that's actually going to help it. No, I don't think starting it on January 1st is going to help at all because it's not relevant when the backtest starts. That we can still get data from before the backtest starts. So that has nothing to do with any of this, right? So can you give me the exact logs? Show me exactly what happened. Why did it not get this data? Can you please show me the logs that happened there? Okay, so let's see here. So smoking gun and the logs. Here's the exact sequence of logs. Right, so now data available for the request. Message no data for specified time frame and contract. Right, the date you're looking for is outside the data's date range. We are it's negative 79. There's actually a bug that we're working on fixing right now. So I have a feeling this might have something to do with this bug, which is kind of annoying that we can't actually run this back test, but we're working on a fix right now. And I think we'll probably have this fixed in the next few hours. But the bot asked for data going back to October 2024 to build the moving averages. The data responded with no data for that specific pre-February period. The bot started the backtest with only 1 day of history instead of 80 days it needed. That's not true at all. Instead of 80 days it needed. Cannot be calculated with 1 day of data. That is not true at all. It did not get 1 day of data. It is highly likely that the bad data gap ended exactly February 14th, or the slight shift. Yeah, I think this is actually a bug in our back testing thing, which we're actually working to fix right now. It's pretty annoying that we can't back test this right now, but I think it would do really freaking well. I think this strategy would perform extremely well. Let's see, maybe one way that we could do this, and I kind of agree with what it's saying, just back test over a longer time period. I'm going to run that. We'll see if this fixes it. Okay. Let's see here. We have, we're saying here, the US is going to attach their debt to crypto. The debt will be spread around the world. Yeah, I think that's a genius idea. I think one of the smartest policy moves I think that I've seen the US government make in recent history has been to basically force companies that create stable coins like USDC and USDT and all that, it's forcing them to buy US treasuries. I think it's one of the smartest policy moves I've ever seen, because what that does is, if these things are huge, by the way, I don't know if you guys realize how big stable coins are. These things are absolutely massive, right? So let's say how big are stable coins? It's actually, yeah. So global stablecoin market is approximately $300 billion. $300 billion. And market has grown significantly, with forecasts suggesting it could potentially reach 500 to 750 billion in the coming years. That is almost $1 trillion in a couple of years. That's crazy. And if these guys are all forced to buy US debt, that is actually really, really good for the US, right? Because if you're forcing stablecoins to buy US treasuries, actually, there's been a really big problem in US treasuries lately in that a lot of countries stopped buying US debt, mainly China. Okay, so China has stopped buying US debt and has been selling a lot of debt. That's why you guys have been seeing higher interest rates, by the way. If you're wondering why interest rates got higher and why all this stuff is happening, it's a lot because China is selling US debt, right? That's what's causing partly what's causing inflation and definitely is causing higher interest rates, right? So the fact that the government actually said this stablecoin market, $300 billion, they are all now legally required to buy US treasuries. That significantly increases demand for treasuries and can actually prevent really bad things from happening. So this is honestly one of the smartest policy moves I have seen any government make for a while. This is a brilliant, brilliant idea. I think it was Dan Sachs that suggested it, and I don't know if you guys ever watched the All In podcast. Very smart group of people, and Dan Sachs is one of them. And he's he's one of the guys that works for a president, and just really brilliant policy move. Okay, so we're running this back test again right now. Let's see how this is going. This might still be getting blocked by our bug, which is a little bit annoying. It is actually getting blocked by our bug. So we're not gonna be able to run this right now. But what I'm gonna do is I'm gonna work on this. I'll send you guys some information on this. If you guys follow us on in our newsletter, we do send out emails and text messages and stuff. We're gonna be sending out a lot of updates over the next little bit about our new platform. If you guys follow us on YouTube, you follow us on in our email list, I will send out the results of this as soon as we get this little bug fixed. But I think this is a really cool strategy. I'm very excited to see what happens with this thing. All right, guys. Well, hope you guys enjoyed that little demo of how our new AI works. This thing is flipping awesome. If you guys want to check it out, go to botspot.trade. You'll be able to use this new AI. As you can see here, this is really damn cool. I was able to talk to the strategy. We were able to figure out, what are some good things that we could be working on. And it was actually able to build that out for me and make all that stuff happen. It was really, really cool what is possible here. And yeah, hope you guys enjoyed that. I'll see you guys next week. Happy Thanksgiving. It's been a pleasure. And we'll see how this strategy performs over the next week. All right. Have a good one, guys.